boys and girls, we are back for another day of volatility. Actually, this is quite nice. Closed out my long Aussies here. I'm thinking probably we're going to test 77.50. If we break it, going to probably miss out on some significant top side, but I don't know. I mean, the market these days have been very hesitant to break key levels, except for the dollar CAD, which had unique, sort of circumstances. The rally in the pound is sort of starting to affect this euro, as well as the euro yen sell-off. That's sometimes the case with the euro. The euro at these levels, the sellers on the euro yen have overwhelmed a little, and the sellers of the euro pound have overwhelmed the euro buyers, who natively have a bit more reason to be optimistic given the US dollar's weakness that we are going to break 115. But the timing of it is always up for conjecture, right? It's always, when's it going to happen? How's it going to happen? The test failed. Maybe we are going to have a pullback first, and euro yen can lead the way down. So euro yen is a trade I liked at 129, probably a little early. The trade number that we're talking at 127.50 is definitely possible if the dollar yen wants to grind lower. I suspected though that the weakness in, the strength in the US stocks might contain any pullback. We'll just have to wait and see how far it pulls back. I don't mind being long in general. The trade that we got into last night and we posted in the room was the long ASX, working out very nicely. ASX was lagging and hadn't responded yet to the, let me explain to you the trade. Right, so the trade is the European futures, so the European session, the DAX started to grind higher, and the US futures started to move higher. And then you had the dovish Yellen, and the market started to spike at 22 when the speech was released. Okay, now at the same time, the day before, the Aussie market had been under heavy selling pressure and had started to recover a little bit. These levels were pretty well known in the ASX market, so the stock market sort of rolled together a little. And as soon as we saw the spike higher above 21,500 in the US stocks, the lagging, given that US stocks the day before had finished flat and then the ASX had actually fallen, was that all of a sudden the ASX was only at 5690. So what I saw here was the potential that Australian traders going to open up and see that US stocks have finished higher, so there was no reason for us to even go lower that day at all, really. So the trajectory of the US stocks have been sideways, then up, and ASX was down here because of its own price action during the day, and then the US stocks had made fresh highs. So we're basically back 2 days worth of rally, and so the catch up that I suspect was going to play out if the US stocks held the gains, which they did in the morning, was that the initial move higher at the start of the Aussie dollar, the ASX open, was going to be higher. It was. And then there was a grind higher for the rest of the day as sellers were sort of squeezing the shorts. Now, this is a target, so get out if you're in. Take profit. It must be very, very close here on the... okay. So, in terms of close enough is good enough for this particular trade, that was the trade idea. That would get back up to previous highs. We didn't break them, but that's fine. Just close out, take your profit, and move on. Well, there's been an MT4 update. Alright, so just hopefully, I mean, that was a bit convoluted, but hopefully I understood what I was doing there with ASX. It's basically playing the ASX futures market and trying to get in on a move which hasn't been fully priced in yet by the Asian traders, and the potential for catch-up was there all day, and it worked out. That's pretty just straight up textbook sort of. One of these things is not like the other. You see, you get that every now and again. If it, it could have been the DAX, could have been whatever. It's just that this particular market was caught a little short, and the Trump Jr. emails weren't having the effect. And then Yellen being dovish does have a strong effect. Also, FTSE was rallying, and a lot of FTSE stocks are dual traded with Australian stocks in our mining as well. So weakness in the US dollar leads to rallies in commodities sometimes too, and so that's another reason to be looking at ASX rather than some of those other pairs. Alright, so where are we sitting today? Well, the Euro rally recovery failed, so the market failed at 115, came back down. Traders were buying into this, and it failed straight at the start of Europe. Let's see if we can break down further. If it continues to be constructive, then we might be entering some longs with stops underneath. Dollar yen's been under pressure for most of the day, and its rally in the Asian session was sold, which is pretty negative because that's not usually the leading sort of indicator. What's going on in the bond market is the US yields are back at a very key level, which is that 2.3 level on the 10-year. Let's have a look at that. So you saw that it was almost way up last week, or earlier this week, and we're talking about the dollar yen potentially breaking up 114.40, and then we've had this pretty sharp pullback in the last couple of days, led by risk off and then leading into Yellen. So the market now is tumbling along this 2.3. If that breaks, then dollar yen's going lower. So keep an eye on this if you're a dollar yen trader. That's very important. And if you're a dollar yen trader, you're basically a euro yen, pound yen trader. This sort of market, dollar yen pullbacks will probably overwhelm the euro and the pound sort of rallies. So pound yen and euro yen have a bit more room to move to the downside. At some point though, those pairs which are in strong uptrends are decent buys. Her testimony today should be the same as yesterday. Don't expect anything different. I'm just interested to see whether the euro can regain its rally and whether dollar yen's going to keep on breaking low. I suspect it will. Yeah, the market's come really far, held a big level, reversed, and it's got reasons to go lower. Buyers have running out of reasons to keep buying. Stocks being strong is okay, but yields moving so dramatically is so important. So let's just see what happens with the yields. If they break lower, you should see this continue down, at least to say 112ish. Can even start, getting into a bear trend and continue to be part of its own range. Buyers will be waiting around 112, but if it breaks 112, then they pull it back down to 110. And the Trump agendas on the ropes, combining with lowering yields, is a pretty strong catalyst for that, regardless of what stocks do. Stocks going down would help, but you don't need that. Yeah, we got the Sydney music in the background. It's nice, isn't it? A few fire trucks, a few ambulances. I don't know if it's the same in every country, but fire trucks go berserk even if it's not to a fire here. It's always struck me as a little bit odd that they sort of should know if it's a real fire or if it's just a fire alarm's been set off by accident by a toaster, i.e. because 100 people are calling 000. But they just go berserk for anything and make a big scene. 2 or 3 of them will come to a big block in a city. Best to be safe than sorry, I suppose, but it's always struck me as a little weird, and I'm not sure if it's the same in every country. Definitely it's not the same in Thailand. I can tell you that for sure. It's not like we've got 1,000 fires in Sydney, it's just that they go berserk if a fire alarm goes off. They're really dedicated. Alright, so let's have a look at some of the research out there. This is, in terms of what I'm doing today, I'm looking at Euro longs, if it can stabilize, and I'm looking potentially lower at Euro yen longs, so when dollar yen's closer to 112. I'm sort of open to the idea of selling Aussie at 77.50. I mean, this level has failed the market's failed in the last 18 months 11 times above 77. So, you know, statistically you have to be looking for the sell, right? You just have to. It's crazy if you're not, because it's failed so many times. But I don't know why it would fail this time. Yeah, it's got that feel of inevitability this time. The pullback was so shallow, and the Kiwis definitely enjoying the party. A big sort of, well, that happened moment last night was Yellen came out, was dovish, sending the US dollar lower, and then the Canadian bank raised rates and was hawkish, more hawkish than we forecast, and we're wondering whether the Canadian dollar was overbought in terms of the Canadian dollar part, and dollar CAD being oversold. We found out that the answer to that, whether it could go much lower, smashing lower here. Now, look, at some point this is a little overdone, and similar to how Aussie dollar and Kiwi dollar can find resistance soon enough, and the euro found resistance, there could be some scope for reversals here. I personally am not looking for that sort of trade. That's a dangerous sort of trade, unless it got a bit silly. So where's silly? Silly's closer to 125. Yeah. So 125 would be enough for me to say, well, this has got to have some sort of pullback in a new range form. But let's keep an eye on oil's actually turned a little bit bullish as well. So with that in the backdrop, it's hard to be longer term looking for the dollar CAD to go back to say 133 or something. It's just right now any sort of counter trend move, like the trade we were looking for was a short squeeze and then sell, and really keen to get into that. Now we probably can wait for some sort of short squeeze regardless of where we get down to first, and then sell into that. But yeah, it's pretty untradeable at these levels unless you're pretty brave to keep selling here. I mean, selling here on dollar CAD is the same as buying Aussie here for the break of 77.50. It's like, okay, yeah, jeez, all right. Is there a safer trade out there? I think so. I think so. Yeah, there's no real reason for the euro to sell off like this. So I wouldn't be saying anything is only what I've seen is a bit of euro pound movement that seemed to be driving this. Euro yen has also been sluggish all day, so you know, it's not like there's been a statement by the ECB saying Draghi's not happy, where Draghi won't be happy, right, at these levels, and especially if it breaks 115. I'll bet you guys right now, if we are 116, okay, 116, by the time it gets to 116, you have ECB sources suggest blah 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 blah, or an ECB member saying blah 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 about the timing of the ECB. Something very dovish will come out if it gets to 116 in the next 2 weeks. And I think you can almost, you know, bet your life on that sort of thing, because they're very reliable that they want the euro to be contained, and it could get to the point where it impacts their policy decision making. Yeah. So although they've said many times that the intention of QE is not to hurt the currency, it's pretty much what the intention is. Same as Japanese. Alright, so keep it real for a sec in your head. If you think for a second the ECB is okay with the euro rally. I feel they probably understand that at some point the euro has to rally when they do normalise, but they probably don't want it to be front loaded. They don't want the market to run ahead of it, and they sort of want to control it a little bit more. So we'll see if that happens. First off, we've got to find support though. You know, we haven't really been the most spectacular day for the euro yet. Alright, let's have a look at some of the bank's takes on Yellen and see exactly where how dovish he was and how big an importance this inflation number on Friday is going to be. Because Friday's inflation numbers sort of the subject matter that she talked about, right? She talked about the slowdown in inflation, or the low inflation being a cause for concern and potentially a way of slowing down the central bank's rate hike policies. And we'll have a look at some of the reactions to the dollar CAD move. Alright. Mrs. Yellen failed to send an iceberg on a collision course for investors yesterday as her speech was interpreted as fairly dovish. So much for the globally coordinated Sintra pack. So basically people are starting to think that there's been this sort of secret move to sort of all start raising rates after the because all these hawkish comments came out into that ECB forum. But yeah, no, Yellen was not part of that. So 10 years, 2.31. Right, double separation PG twofold in nature. First was Yellen's rubber stamping of Brainard's comment from the prior day saying the Fed chair that because neutral rates are currently quite low by historical standards, the federal fund rates would not have to rise all that much further to get a neutral policy stance. The second concerned inflation, with Yellen's broad narrative around the topic a little bit more dovish relative to recent communications. I believe part of the weakness in inflation reflects transitory factors, but well recognised that inflation has been running under our 2% objective, that there could be more going on there. So she's opening the door. She's opening the door. And we've got to keep in the back of your mind, Fed forecasts have been wrong for decades. Bank of Canada becomes the first G7 central bank to join the Fed in raising rates in the current cycle, along with a fairly hawkish measure. Inflation was downplayed as being temporary. Alright, nothing crazy there. Here we go, Greggy Gibbs. What are we saying here, Greg? What are we saying here? Aussie dollar's going to be the new CAD? God, here we go. It's begun, boys. It is begun. God. Now, this is half the reason Aussie's going berserk and the New Zealand dollar. We saw this 2 weeks ago as well, when the Canadian dollar had that really big rally, that the Aussie and the Kiwi went with it, saying that they're going to be part of the game as well. Yeah, no, I don't think so. But you know, while the market's playing that game, you got to play that game too. Yeah, you can lose a lot of money if you don't play the game the market's playing. You know, sometimes you say, "Oh, the talk about it is bullish enough." Some traders thinking it is bullish enough. The Aussie US dollar buyers using it to break 77.50 is enough. It's enough of a story to break 77.50. Use the story to break the technical resistance, then we can just get momentum to keep going. You know, it doesn't matter that things are not the same here in Australia or New Zealand. or Canada. They're all trading together. They're the commodity block. You gotta simplify things to be what's important, what's not sometimes. How will the market react to the story? How will the market play the story? How long can it be conjecture for? Well, it can be conjecture until the RBA specifically says that they're not Canada or not looking to raise rates. One of the members might say it. If everyone talks about it, it gets into financial media, and then an RBA member comes out and says, when no situation similar to the business cycle of Canada, we don't have emergency rate cuts to get out of, and we still see the next move is significantly far off. Something like that, right? Take the wind right out of the sails. But in the meantime, before that happens, the market can weave its own story. That all the central banks in the world are gearing up to raise rates. It's coming sooner rather than later. The US dollar is on a bit of a pausing cycle, so the Aussies can take advantage of that. Blah blah blah. So this is it's important to understand how narratives sort of develop, and these narratives are used a lot. I mean, you can sometimes say, well, the technicals are pushing the narrative, but I do believe that the narrative, similar to how we had that narrative in the euro, came well before, and it was a very predictable narrative compared to the price action and breaking 110. So we've demonstrated a few times in the last 8 months anyway, talking to you guys how this narrative can become such a big thing. And I'm 100% sure if we are at 78 next week, they're talking about how Australia may be raising rates quicker than the market's forecasts. Blah blah blah. If you're reading Analyst anyway, explaining why the market does what it does. Market's starting to think beyond 2 BOC hikes this year. God. Here we go. Here we go. Yeah, so I mean, if there is a QE wind down going on in asset balance sheet reductions, and at the same time the economy's stalling, they could definitely use this as an excuse. The market may be dismissing recent evidence of recovery in Australia. Narrative from local commentators is still negative. Yeah, well, that's right. So am I. Most do not see rate hikes coming. However, recent business surveys and labour markets have picked up. Okay. It rose to 9. It didn't. This is really not. No one looks at this NAB business survey. This is crazy talk. No one thought a rate hike was coming into view for Canada less than 2 months ago. The market's too complacent about the risk in Australia. Yeah. So you're going to hear this more and more, guys. Especially if the Aussie breaks 77.50. Increasing chances of a rate hike. Don't get angry though, you can just play the game. Play the game the market's playing. You don't get angry by saying the market's wrong and the Aussie's going to go down and selling and getting into trouble. You wait for either correction by the RBA, or by data being very weak, or or the market to turn itself before trying to sell into something. Let's have a look at a little bit technicals here. It's been a while since we looked at technicals, but I just want to check out some of the bigger levels. Another 70 on the dollar yen. there's not too many even close to the 200 at the moment. That Euro pound reversal must be getting pretty serious now. Another way of playing Euro pound short is pound Swiss long. We talked about that a lot back in the days when we were trading Euro pound a lot. So the pound Swiss is a better alternative if the Euro Swiss is in a rally. So in terms of whether the Euro Swiss is in a rally, it was stalling at 110. Did break back to it now. Well, this is not making it easy for me to come to this point. The point I was going to make, and I was looking at this yesterday, was that we can use strength in the Euro Swiss to get into some pound Swiss instead of selling Euro pound, but looks like the Euro Swiss might break back below into that previous range. So we've just got to keep an eye on it here. So in that scenario, if the Euro Swiss breaks back below to 109, then the pound Swiss will actually underperform any sort of extension high lower in the Euro pound. So yeah, I mean, for a very long time, when the Euro Swiss was stuck at 120 and didn't move at all, it was locked in 1 for 1. So the market's sort of grown accustomed to be buying pound Swiss when you're selling Euro pound and vice versa. I shouldn't be looking at the dollar yen supports. I'm just going to get myself in trouble. The story, you know, the yield drop is so significant that it can really derail the whole rally. And though I'm a native Euro yen buyer, just, you know, you don't want to get into trouble. 128 though, 127.50. I think we can get into some Euro yen down there, guys. So Euro yen is probably my next trade to be buying more. And I'm very bullish on this. You guys have been hearing me talk about this for months, but I'm looking for the break now of 130 on the next level, next rally up. Keep it down here. Okay, that'll do. If we break below 127, I'll probably have to be forced to close and just wait to see what happens next. But at the moment, I'm happy to be buying this dip. But yeah, if you didn't catch, the first thing we did is close the ASX. ASX trade is done now. We'll look for another stock trade if there's something clean, but stocks have been pretty hard to sell and we're really high up, so it's hard to keep on. Alright traders, not too much on the horizon tonight. Tomorrow though, the CPI numbers, because of Yellen's focus on them, because of the market's focus on them more importantly as well, a strong number there will really sharply rebound the US dollar, which is being hit on all sides, and a weak number will just reinforce the new narrative that the US is not going to be raising rates. So it's a pretty important number, probably the most important CPI number I've seen in the last couple of years, given the nascent or the sell-off in the US dollar based upon it. Alright guys, have a good night and trade a bit safe. This market's going to get a little more tricky, I think.